Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 9th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. The previous session incredibly compressed in terms of its price range and price action. It was pretty much a super dead trading range for the most part, and one of the smallest ranges we had seen in quite some time, along the lines of holiday trading back here. So it was a very, very compressed session overall for the ES and the NQ. The ES eventually closed the day somewhere around 28 or 30% of average range. And for the most part, that compression, again, holding at highs, holding above the 5,000 level, still suggests a continuation to the upside until proven otherwise. We've mentioned before, this thing just continues to chug along. It really is lacking any kind of two-way trade or heavy selling pressure, and if we do see some selling pressure, this thing tends to bounce right back. So again, very, very strong overall. Today's range, again, coming out of that range right now, but still very, very narrow overall. 14.25 points of range right now. The previous session here was 16.25 by the end of the day, but for the most part, it was 12.5 points for much of the session. So here today, already at 14.25 points and seeing a bit of upside expansion at the moment. If this thing can reach 30 points today, that'd be a pretty big day considering how much the volatility has dropped. You look right here, the 5-period average has dropped significantly against the 10. The 10 is still hanging around the 45, 46, 48 points per day area, whereas right now the 5-period average has dropped dramatically into the 65% area of the 10-period average. So very, very quiet price action for the most part, but still a very bullish overall trend. The 8-period average continues to rise. The bullish Pima trigger zone continues to be an area where bulls continue to defend, and this is now 2 months into the year and a quarter into last year as well. So last year, after the initial rally here in November, we've now seen about 4 straight months of being able to see bulls defend that 8-period average, the bullish Pima trigger zone, and keep this thing churning to the upside. Tremendous strength overall. And again, until we see some significant rejection, some huge rejection day, this market continues to chug along to the upside until proven otherwise. I mentioned yesterday, even if we pulled back into the 95 to 5,000 zone, bulls will be looking to defend that and continue to push this thing higher. Now today may end up being a 2-day narrow range by the time it's all said and done, and just keep things kind of locked in here ahead of next week. But overall, this market just continues to quietly churn higher until proven otherwise. If we take a look here at the NQ, similar price action out of the NQ. The previous session, very, very quiet in terms of its price range. You can see down here, again, about as quiet as it's been since the last couple of days of last year's trading. That was a perfect doji-like day with an upward bias. This market continues to stretch for the 18K level, and again, through the previous session's highs, we may ultimately end up in a 2-day narrow range, but with an upward bias, a significant upward bias. Even if price were to pull back here over the next week, it could be a check mark move higher as this market continues to stretch for 18K and beyond. Again, in order to really break this trend, you need a significant rejection. You need a failure at the previous month's midpoint. These types of things, and really we're just not seeing that right now. Just full steam to the upside. And when you do have a very bullish uptrending market like this, the price ranges do tend to come down a bit. Even in the most bullish scenarios, the price ranges aren't significant. It's when you see heavy selling pressure where the price ranges really increase. So anything in here where prices are selling off, you see much higher price range. In an uptrending move, things tend to be a bit more quiet and just churning out upside points. So right now, any pullback that still happens could still be bought for a continuation up until proven otherwise, as this market continues to stretch for 18K. Crude oil had a significantly bullish day in the previous session, one of the biggest days of the year. The second biggest day especially to the upside outside of the second day of the year, where we had a 4-point range that day. Huge buy G squat day there. We saw a similar day here yesterday, another 125+% day, 3-point day buy G squat as well. Huge move to the upside as it reclaimed the 74 level. We were looking for price to come back to the 75.88 level to 76, and it did that and then some. That's how big of a day it was here. And now again, is this going to be kind of the catalyst that leads to much more strength ahead? After a day of that magnitude, the tendency could be for a range-bound session to kind of catch its breath and see a little bit of digestive type of price action, and we're seeing that at the moment. Any pullback here early on, if you find a strong morning low, it could be an opportunity to push the thing back up. Not anticipating another high range day, instead anticipating kind of what we're seeing now, a little bit of morning weakness followed by a little bit of strength back up, and maybe finishing the day somewhere between 75.50 and 77 as this thing builds energy for what could be a continuation next week. This market's still pushing higher toward 79.80, which would be about the high of the year, but once it starts to get through 80, this thing will really open up the upside. For February, we were looking for about a 10-point range for February. Right here, the low is 71.40, so 71.40 plus 10 gets you about 81.40. That right there is the average range, 81.36 here for the month over the last 10 months. So looking for about a 10-point range this month with an upside target at about 81.40 by the end of the month. Overall, again, today could be mostly range bound, but still the flow is headed higher. If we take a look here at gold futures, this one has seen a bit of weakness here, but was not able to really fall well through. The 2040 level continues to kind of hang on to that level barely. 2040 is kind of the midline between 2080 and 2000. So you have this upper 40-point range and you have this lower 40-point range right now, and then you have the overall 80-point range that is right in the center here of this larger key range between those two major impact points there. Overall, this market just kind of sitting here waiting at the moment for something. A failure at 2040 will open up 2000, and then maybe it trades back up. If it can continue to hold 2040, maybe it bounces back up to 2080 and holds. This is just the range we're at, and where it's just super compressed. Again, not the best price action. I've mentioned that for multiple weeks right now. But after you see price action like that, you tend to see a major move to come. And I liken this current price action here to what we saw back here, where things were getting very sideways and not very good, and then it unleashed a massive move and wave of action. And that's what could happen up ahead. We could see kind of this style movement up ahead, but right now it's still kind of in the range. So still got to let it build out a little bit, but soon we may see a bit of volatility that finally is released out of this range. Until then, patience is key. Lastly, taking a look here at the YM. The YM right now, very bullish overall. New highs here as it continues to trade at the new all-time highs. Above the 38.8 level. Very range bound. It's kind of a high range as well. You know, not super compressed, but definitely building energy. And the amount of energy in this range is easily 1,200 points. Once we do get a breakout, it could actually be something north of 1,500 points if it really gets going. So if we can find ourselves a very solid breakout from this 8, 9, 10-day narrow range here, we could be looking at least a 1,200 point move up ahead. I mentioned before, 38.8 plus 1,200 puts you into the 40K zone. So 40,000 could be ahead for this market. It's not too far off, right up here. So again, that right there, this is 1,000 points plus 200. There's your 1,200 points right there. So we could be looking at a big time continuation to the upside if we can get a breakout from this range. To the upside, we could be looking at strength over the next couple of weeks that can take us there. Now, if we see a strong rejection here and we fall into the range, then maybe it's 1,000 or 1,200 points down from a pivot high. So if we come up here and hit 39.2 and reject hard, then 39.2 takes us back to 38K. That would be a 1200 move right back down and within range. So it doesn't necessarily have to be up, but this market has been trending up at a big time clip. So until proven otherwise, this market's still very, very bullish. All right, that is it for now. We'll see how this develops here heading into the weekend. Happy Friday. Please be sure to like, share, and subscribe. Have a fantastic weekend, and I'll see you in the trading room. Take care.